Hi, everyone. Thank you for following Pikes Peak Trades either on Twitter or YouTube. And excited to show you video chart updates for this week. Just an extraordinary week. The S&P puts in its best week since July. Amazon, for instance, puts in a bullish outside week. Lots of really, really great things going on. I'm going to take you through the major things that I chart on a daily time frame, also on a 15-minute time frame. I use the daily charts for intermediate and long-term trend confirmation, showing important moving average support resistance along with using my support and resistance rails. Those channeling techniques follow along with Elliott wave theory. I use the 15-minute chart for my price projections for short-term swing trades. I'm not a day trader. I don't have the ability to watch markets from 9:30 to 4 Eastern time. So my swing trades typically are 2 to 10 days in duration, and I try to catch the meat of the move, which I want to start with here in the SPX. I think we are right now in the meat of a sub-degree 3 of 3 move by Elliott wave terms. And I think there is still room to run. So right here within this aggressive looking acceleration channel, I think we could see early next week the S&P 500 well above 3,500, eventually targeting 3,600. And in the way that my channeling projects is I have an initial bullish kickoff wave running right up into the election at around 3,800. So that is my bullish projection. We're going to see what's going to happen. If I take you to the 15-minute short term, you're going to see that within this channel, we're still right in the middle. And price likes to move from the rails. So I really do think it seems likely that we can get a top rail touch. I think the sideways consolidation during the last half of the trading day Friday really just cooled off the RSI. I'm not concerned about that from a divergence standpoint because that's just intraday. When we talk about MACD and RSI divergence for short-term or long-term trend change decisions, the divergence really needs to take place over a few days. So intraday divergences, again, I'm not a day trader. I don't look for that. I look for confirmation for swings. Is it possible that we get a little bit of downward movement Monday? Of course, it's possible. It could be a heavy news weekend. You know that right now stimulus talks are going on. And of course, I hope that we have positive resolution. Millions of Americans still need financial and economic, small business, restaurant, airlines, need support. If the news comes out negative, we could see another short-term negative response, which then would target this lower rail. So moving over into tech, and I'm just going to kind of toggle back and forth here between the daily and the short term. Again, I have tech solidly within a wave 3. I have a couple targets here, 287 to 295 on QQQ. I do want to point out a little bit of caution on what I think is the solid break of the inverse head and shoulder neckline. We didn't quite get the confirming volume that you'd like to see. We had nice volume here up off the head low. On that break, we've yet to see that confirming volume. So I'm not concerned unless we see a false breakdown that would have to move it decisively below 280. That would actually be very disappointing. But I got to leave in that possibility that this has actually just been some type of double zigzag corrective. So a 1, 2, 3, 4, 5 up that overlapped here. And I do think that's very low probability, but it's going to remain on my chart for a little while. So if I take you to QQQ in the short term, you're just going to kind of see that zoomed in breakout that happened right here on Friday. I had front run a lot of this expecting that tech was going to break out. I'll take you through those individual names. You can see that I was charting an inverse head and shoulder within an inverse head and shoulder. So I actually initially got long right here on this neckline break. So I had held TQQQ all the way through. I'm still holding TQQQ as my leverage play. And then you're going to see the further upside targets if I just kind of scroll out a little bit. Getting into some individual names. So Apple on Friday confirmed its break and its hold. I think a test and a move up off of its neckline. It didn't move above its October 1st high. I do think that's imminent. I think that will be coming. I did add October 16th Apple calls right here on Friday on that breakout and move up. On the daily time frame for Apple, you're going to see that close above that top neckline, and then look at how far I think it's got to run. I would love to say it's blue skies ahead. We're not quite out of the woods yet because we've got to get a confirming break above this high here. But look within that channel. I'm going to get rid of that. It now needs to be a solid channel. I think it's going to be an active channel looking for some touches as we move higher. I think we could expect a pretty strong move in big tech names all the way up through their earnings dates towards the latter part of October. So Amazon, what a day for Amazon. Those that follow me on Twitter, you saw me tweet out one example of a call option trade. I should have held some. You know, the old phrase, let your winners run. I'm still learning every day how to do that better. But I have Amazon still very early within its wave 3. And you know, people would say, well, this is an outlandish projection. Look, it's not. This right here is a very typical Fibonacci extension over what I think is a 1-2 bull setup with the confirming breakout well above all of its moving averages. So I did not add Amazon into the meat of this move. On the short-term time frame, it got above what I think could be an active rail, and there absolutely are breakout targets well to the upside. But I think we could see a little bit of cooling off. You know, Amazon is one that's not for the faint of heart. You definitely have to have some holding and staying power, which I had also tweeted out that this back test right in here earlier this week was kind of painful for me to watch some option premium burn. But then it paid off back for me on Friday's move. So I'm going to be watching Amazon closely. Do we get a small sub-degree pullback and then to another stronger move up? Or do we just keep blasting higher? We're going to have to wait and see. Okay, Tesla. Tesla is one that I did decide Friday at the close to try to front run an inverse head and shoulder breakout. I liked the sideways consolidation above the 200 period MA and above this horizontal support at 426. It does need to decisively break the 444 into 460 area, but you're going to see up here, these are typical Fibonacci extension targets. These are not outlandish moves in the scope of probability. On the daily chart for Tesla, you're just going to see that inverse head and shoulder neckline a little more clearly in purple. So on Monday, a neckline break would be at about 440. So if you are a little more conservative in playing these very, very strong setups, you would wait for a move up and possibly a back test above 440 and into the mid, maybe 430 ranges. I do like how it bounced right off the 8-day EMA. I do like how it held this lower rail. I am bullish on Tesla moving forward. Okay, a potential catch-up play here. Now, a catch-up play in Facebook, because Facebook did not participate heavily in Friday's tech rally. But if I was to zoom in here, I think that candle is a bullish hammer. So I did enter Facebook calls. I didn't go heavy in additional calls on Friday. Tesla and Facebook were ones I did add. I do think Facebook has some tremendous upside potential. I'm still leaving as a primary black count an ABC down move. That's really just mainly out there just because we haven't confirmed anywhere close yet to this high that was set on October 1st. And you know, there is the antitrust news out there, which I am not a news trader. I don't think it's a high probability thing that's going to happen in the lead up to earnings. I do expect in Facebook another ramp up into earnings, but I need to show you on the short-term chart here for Facebook, it's right at some significant resistance, which you're going to see more as we get into Microsoft and Google. So this line at 265 going all the way back into mid-August was the consolidating line that had to be broken to the upside. And you're seeing it again. So price has memory. Those that doubt the benefits of technical analysis, they just maybe don't quite understand or believe in the power of these patterns and the memory of price. This to me is inarguable. This area of consolidation, that symmetry is striking. I do think it is poised to break to the upside, a break of 265, a break of 268, and then eventually here, this break of 278, which connects all the way back to this high in early August, is what's going to be needed to get close to challenging these all-time highs in Facebook. Let me show you something very similar in Microsoft and Google, taking you all the way back here to early July. So there was a downtrend and then a negative earning reaction for Microsoft through the end of July. It touched this horizontal rail 1, 2, 3, 4, 5 times before it finally got this breakout. That of course we know was a false breakout, but that means in order for the breakout to be real, we've got to get back through that area again. So I had October 9th calls in Microsoft that I sold at the close for a nice profit. I did not add Microsoft because of just maybe that resistance. I wasn't quite as confident to add both Facebook and Microsoft. But if it breaks, you're going to see tremendous upside targets that you can still enter and still catch the meat of the move if you weren't yet long. Google, very similar. So Google on the short term has this right here that I think was broken above, but let me get you further out because Google here in the longer term is bumping right up against another rail very similar to Microsoft. If I took you through the number of times that this horizontal rail hits support or resistance, it's 20. Today marked the 20th. Significant moves. Now, if you're an active bear, if your bias is bullish on the bear side, and you chart things in the way that I do, I think you would have actually shorted Friday's close, betting that this is going to cap the move and that we're going to move down to lower lows. I'm not an active bear. That is not my bias. I think there is strong evidence and momentum and breadth favoring continued bullish moves, but the bull's got to break this level. And Google hasn't also yet broken its 50-day MA. So you can see I do have very bullish targets on Google. One that I did enter calls. I tweeted that out. On this neckline break here, I added. That was on Thursday. Great follow through Friday. Those are up 80%, and I'm going to hold them into the week looking for higher upside targets. Okay, so those the main indices in big tech that I follow. I do want to show you some very, very interesting other names. So I get questions often about Zoom. So I want to show you a zoomed out picture here, of what Zoom has been progressing. This intermediate one was the culmination of the move off of its IPO. In April 2009, we got a move down that was nearly, almost a 50% retrace. And then what I'm charting here, a couple possibilities. So a 1, 2, 3, 4, 5 up into an intermediate 3, and we're working on the resolution of what I think is the 5th and final wave to complete a primary 1. So I am short to intermediate term bullish on Zoom. You're going to see a short-term breakout when I show you that chart. You can just see this Elliott wave triangle or a classical TA bullish pennant breakout and hold. But after this move up, I do think Zoom is going to cool off significantly. And maybe If we start seeing the economy more fully recover and transition, maybe you're going to see less demand for Zoom video conferencing. That's speculation on my part, but we're just going to have to watch how it plays out. But in the short term, I'm bullish, and it's this contracting triangle on Friday that broke and tested that got me long. So I did not buy the breakout. I like to buy retests. I like to buy, there's a test and a retest. I bought right in here. So I bought when it was about at 490. I did buy aggressive October 16th calls, looking for a resolution out of this pennant. We're not going to get, don't get me wrong, we're not going to get to 560 by the end of next week's trading. That's going to take a while. Maybe that takes the rest of the month. Maybe that takes even longer, but I did enter an actively long position. Okay, another one that I like, that I want to show you on the daily, is I want to show you Walmart's, what I think is a coupled handle breakout. So Walmart in a consolidating cup movement through September, then we've got that handle through the middle of October, I think a breakout. If Walmart can get above 144, I will get much more active potentially with some calls. I'm holding Walmart long stock because the upside targets are big. I want to show you on the short term here of Walmart that you're going to see that it's got a significant resistance rail. It's bumping against it. So a false breakout, a bump, another bump. If it can get above 144, we've got these upside targets. Now, I want to contrast that Walmart cup and handle with AMD because I think we got right here, and I got suckered into it a little bit. We got a false cup and handle pattern. You're going to notice how many days of consolidation did Walmart take in this handle? You know, it was 6 days. I think it was too quick for me to call this. That's why it's in red. So I think a more legitimate handle is going to be traced out here. It could go sideways. It could go down. AMD has to break these lids in the 86 to 88 range in order for what I do still think are strong targets to the upside. So I'm not going to try to front run this until I see movement back up closer to the lids. So let me take you through some last ones here. Roku. Now, I had tweeted this out. These look to me like exhaustion candles above this big gap. I don't know. Maybe I sold too early and took profits too early, but I think Roku is going to try to fill that gap and head maybe back towards 200. On the short term for Roku, you're going to see those targets for a possible gap fill. Popped above the rail, I think back inside the rail. We're going to see what happens. So also similarly, let me skip ahead to Beyond. I think possible that Beyond, maybe these are exhaustion candles outside of the rails. I did take profits on my Beyond positions. We're going to see if Beyond has some consolidation that could get me back long. On the short term here for Beyond, you're going to see that maybe it's just a triangle. So maybe just a short-term triangle play here that has targets that might make me regret getting long, but we're going to see. A couple more just here real quickly is Boeing. So I've got Boeing within an acceleration up channel. I did buy Boeing calls. On the daily, Boeing did actually lose what I thought was kind of a significant lower supporting rail, but because it's still barely held above its 50-day, I do have some upside resolution happening here on Boeing. Okay, let me move just real quickly to metals and miners. So I am very bullish. You've been following me on metals and miners, GLD and GDX. We've got price moving up against this downward rail. You'll see that a little bit more clearly when I take you here into the daily chart, that I think we got to move up and out of that rail. So I am bullish, holding GLD calls, holding GDXJ, long stock, and I've got some aggressive plays in some silver miners, Hecla, First Majestic, just showing you real quickly, massive bull flag breakouts that I think are just getting started that you can play here in metals and miners. So on this very, very strong move, I did add more with some GLD and GDXJ, and we're going to see what happens. So I think this overall is kind of a reinflationary play that we could really see. We could see maybe interest rates start to continue to creep back up, which means that financials are going to become more profitable. Maybe they're going to start making some loans, which would reinflate money supply. You're going to see that with XLF. That could be an acceleration channel. I really do think XLF, with this back test of the 200 MA, has really, really good upside, as does small caps. So just real briefly here as I wrap things up. So I do think we've got strong confirmation of uptrends. Could we see a cooling off Monday? We certainly could, but we could also just see strong continuation throughout the month of October, which is what my primary counts here are calling for. So hope you enjoy the video. I love the questions and comments that I'm getting on Twitter. You can follow me there, follow me on my YouTube channel, and let's see what happens as we look ahead to what I think could be another very exciting trading week.